Artificial intelligence is dominating headlines, but not every AI stock is created equal. Some are flying under the radar, quietly building real contracts, real tech, and real growth opportunities. BigBear.ai might be one of those hidden gems, or it could be a ticking time bomb. Today, we're going to find out if BBAI stock is a smart bet on the future, or a risk that's simply not worth taking. Hey everyone, it's Robert. Welcome back to The Alternative Investor. If you're looking for overlooked stocks with big upside potential, or major risk, you're in the right place. Today, we're diving into BigBear.ai, ticker symbol BBAI. We'll break down the company's core business, financials, growth strategy, risks, and whether or not it's worth a place in your portfolio. Make sure you like the video and subscribe, because we're about to separate the hype from the hard numbers. At first glance, BigBear.ai looks like just another AI company, but the reality is a lot more interesting. BigBear.ai specializes in decision intelligence, predictive analytics, and autonomous systems. Their technology is primarily aimed at helping organizations make faster, smarter, and better decisions by analyzing enormous datasets. What sets BigBear apart is that their business is heavily tied to government contracts, especially in defense, national security, and intelligence sectors. They also serve commercial clients, but federal work is still their foundation. Their products range from AI-powered forecasting tools to simulation platforms used for military training and supply chain logistics. This isn't about building consumer apps. It's about mission-critical systems that governments and large enterprises rely on. As of April 29, 2025, BigBear.ai trades at approximately $3.71 per share, with a market capitalization of around $1.03 billion. In the fourth quarter of 2024, the company reported revenue of $43.8 million, marking an 8% year-over-year increase. However, the net loss for the quarter widened significantly to $108 million, primarily due to non-cash changes in the fair value of derivative liabilities related to convertible notes and warrants. For the full year 2024, BigBear.ai's revenue totaled $158.24 million, reflecting a modest 1.98% growth compared to the previous year. The company's cash balance stood at $50.1 million as of December 31, 2024. In the first quarter of 2025, BigBear.ai received $64.7 million in gross proceeds from warrant exercises, which, along with $58 million in debt conversions, reduced net debt from $150 million to $27 million. Analyst coverage on BigBear.ai is relatively limited. As of the latest reports, the average 12-month price target is $5.33, with estimates ranging from $4 to $6. The consensus rating is a moderate buy, based on evaluations from 4 analysts. This suggests a potential upside of approximately 44% from the current trading price. BigBear.ai aims to expand its footprint beyond government contracts into the commercial enterprise sector. The company is targeting industries such as healthcare, manufacturing, and logistics, which are increasingly seeking data-driven decision-making tools. Additionally, BigBear.ai is focusing on enhancing its machine learning capabilities and predictive modeling tools through strategic acquisitions. The company is also leveraging the defense spending boom, with national security budgets rising globally. BigBear.ai's participation in the Department of Defense's Rapid Defense Experimentation Reserve Technology, Readiness Experimentation (ARD or T-REX) events showcases its commitment to advancing AI orchestration at the edge. For investors interested in generating income while holding or considering purchasing BBAI shares, option strategies could be beneficial. Given the stock's volatility, premiums on short-term puts and calls can be attractive. Selling cash-secured puts at strike prices below the current stock price allows investors to potentially acquire shares at a discount while collecting premium income. If the stock remains above the strike price, the premium is retained as profit. If assigned, the investor owns the stock at an effective lower cost. For those already holding BBAI shares, selling covered calls can generate additional income while holding the position. This approach can be particularly useful in managing the risks associated with a speculative investment like BBAI. Investing in BigBear.ai carries significant risks. The company remains unprofitable with substantial net losses and limited cash reserves. Any slowdown in contract awards or delays in commercial expansion could necessitate additional capital raises, potentially diluting existing shareholders. Competition in the AI analytics and decision intelligence space is intense, with major players like Palantir, Microsoft, and Amazon developing overlapping tools. Even with strong technology, securing contracts against better-funded competitors is challenging. Furthermore, government budgets, especially in defense, can be unpredictable. Shifts in spending priorities or political instability could impact future growth prospects. So, is BigBear.ai a hidden AI gem, or a ticking time bomb? The answer depends on your risk tolerance and investment horizon. If you believe in the future of AI in government and critical infrastructure and can withstand significant volatility, BBAI might offer substantial returns from its current valuation. However, if you prefer predictable cash flow and lower risk, it may be prudent to observe from the sidelines until clearer signs of profitability emerge. Now, I want to hear from you. Are you investing in BigBear.ai, or are you waiting for stronger indicators before making a move? Share your thoughts in the comments below. If you found this breakdown helpful, please like the video, subscribe for more in-depth analyses, and stay tuned for our next deep dive.